7 principles every online investor needs to follow. Online investing can be risky and intimidating if you don't follow a few basic principles. Not only do you need to know what you're doing, but you also have to understand why you're doing it and how to make smart decisions with your money. With that in mind, here are 7 principles every online investor needs to follow in order to protect their finances and ensure they get the best possible returns on their investments over time. 1. Define your goals. For any online investor, the first step to success is to define and clarify their investment goals. What do you want to achieve? Are you looking for short-term gains or long-term financial security? Do you want to supplement your income or build up a retirement nest egg? Your goal will determine the type of investments you make, how much you should invest, and the strategies you use. Once you have identified your goals, it's important to make a plan. This plan should include how much money you are willing to risk, what types of investments you want to make, when to buy and sell, and what strategies you will use. Having a plan will help you stay focused and motivated as you progress towards achieving your goals. By setting clear investment goals and creating a plan of action, you can ensure that your online investing journey is successful. 2. Do your research. Investing in the stock market can be a great way to make money, but it's not without risk. Before you start trading online, it's important to do your research and understand the principles of investing. Doing your research means taking the time to read up on stocks, the markets, and strategies. You should also look at financial news, use tools like chart analysis, and familiarize yourself with any terminology you come across. It's also important to think about your investment goals and what type of investor you are. Are you looking for short-term gains or long-term growth? Do you prefer low-risk investments or high-risk, high-reward investments? Knowing your risk tolerance and goals will help you make the best decisions for your portfolio. Finally, you should also have an understanding of the different types of investments available to you. Stocks, bonds, mutual funds, options, and ETFs are just a few of the many types of investments you can choose from. Having a grasp of these investments will help you determine which ones are best suited to your needs. By taking the time to do your research and understand the principles of investing, you will be able to make informed decisions when it comes to investing online. 3. Consider the risks and try to maximize the risk-reward ratio. Investing online can be a great way to grow your wealth, but it's important to be mindful of the risks involved. Investing in any type of asset carries with it some degree of risk, and it's important to understand these risks before you start investing. One of the most important principles for any online investor is to consider the risks and try to maximize the risk-reward ratio. When evaluating a potential investment, make sure that you understand how much you could lose if the investment goes wrong. Ask yourself questions such as, is the investment worth the risk? Are there any safer alternatives available? Also, be sure to understand what type of return you can expect and whether the rewards justify the risks. The next step is to diversify your investments. Rather than putting all of your eggs in one basket, spread your investments across different asset classes and sectors. This way, you'll be able to protect yourself against losses due to market volatility or economic downturns. It's also important to understand that diversification does not guarantee a profit or protect against losses. Finally, don't forget about taxes when investing online. Depending on where you live, you may have to pay taxes on your investments. Make sure that you understand your tax obligations before you invest and factor them into your overall strategy. By understanding and following these 7 principles for every online investor, you will be able to make better decisions when it comes to investing and minimizing your risk. With careful consideration and proper planning, you can become a successful online investor. 4. Have an emergency fund. When it comes to investing, having an emergency fund is essential. An emergency fund is money set aside for unexpected expenses, such as a medical emergency or sudden job loss. It's important to have an emergency fund, because it will give you the ability to cover unexpected expenses without having to dip into your investments. This is especially important if you're an online investor, because online investments can be volatile and require more active management. Having an emergency fund will also provide you with peace of mind, and give you the confidence to make wise investment decisions without worrying about what would happen if something went wrong. When setting up an emergency fund, make sure to save enough money to cover at least 6 months of living expenses. Start by setting aside small amounts each month and increase the amount as your income allows. This will help you protect your financial future and provide you with a cushion in case of any unforeseen circumstances. 5. Create a diversified portfolio and diversify using different kind of markets like stocks, crypto, and index or etc. When investing online, it's important to create a diversified portfolio and diversify using different kinds of markets. This means you should look at stocks, cryptocurrencies, indices, commodities, and more. Each market has its own unique characteristics and risk levels, so it's important to consider the pros and cons of each before deciding which one is right for you. Diversification helps spread out your risk across different types of investments and can help you protect against major losses if one market fails. You can diversify within each asset class as well, such as investing in multiple stocks or cryptocurrencies rather than focusing on just one. Another key principle to keep in mind when investing online is to research each investment thoroughly. Make sure you understand the underlying fundamentals of the company or asset you're investing in, and review any news or reports that may affect the performance of that asset. You should also think carefully about what your goals are and how much risk you're willing to take on. Do you want short-term gains or long-term investments? Are you willing to accept a certain amount of risk for the potential for higher returns? By having a clear understanding of your goals and risk tolerance, you can create a portfolio that works for you. Finally, it's important to manage your money effectively. Make sure you stick to your budget, track all of your investments, and keep an eye out for fees or hidden costs that could affect your returns. By following these 7 principles, every online investor can create a portfolio that suits their needs and helps them reach their financial goals. Six, stay disciplined. When investing online, it's essential to stay disciplined even if you are a real Deegan investor. While the temptation to go big or make risky investments may be there, having a disciplined approach is key to long-term success. I told you about my friends that have bought such a big bag of Shiba Inu or others useless meme coin and ended up becoming a big bag holders. Hope their son will be able to manage some gains. 7. Review your progress. As an online investor, it is important to regularly review your progress. Taking the time to track your investments, analyze performance, and determine the best strategies for future investments will help ensure that you are consistently making the most of your resources. When reviewing your progress, make sure to look at both short-term and long-term trends. While short-term investments can provide quick returns, they often come with increased risk. Long-term investments may not pay off as quickly, but they can provide greater returns in the long run. It is also important to review any changes in the markets or trends that could impact your investments. Keeping up with news, industry reports, and financial analysis can help you stay on top of these changes and make sure that you are aware of how they could affect your portfolio. Finally, don't forget to review your overall financial plan. Make sure that you are still on track to reach your goals, whether that be saving for retirement, paying off debt, or building an emergency fund. Taking time to review your progress will help keep you on track to achieving financial success. Thank you for watching our videos and learning about the 7 principles every online investor needs to follow. Now that you are armed with the knowledge to make more informed decisions, it's time to take action. Creating a successful investing strategy takes work and dedication, but the payoff can be substantive. If you found this blog post helpful, make sure to subscribe to our YouTube channel for more content about investing and financial planning. Also, don't forget to leave a like and comment telling us what do you think about our contents.